So, Reabold Resources. So we're an oil and gas company, but we look a little bit different to most oil and gas companies. We do things a little bit differently. We embarked on this this kind of journey that we started and implemented a new strategy into Reabold about 5 years ago. And this was really based on us coming at this from more of an investor mindset than an oil and gas person mindset. And we noted around the industry that there was a major deficit of capital, which meant some assets were getting left behind. And we thought we could identify very high quality assets that were in the pre-cash flow stage of their own asset life cycles, that were going to be good assets, but were being managed by companies that, though whilst very capable, were underfunded. And there was a significant lack of capital in the industry generally. So our plan was to identify these high-quality assets, to work with the incumbent management teams on implementing sensible strategies, putting in some money, taking ownership positions in these companies, trying to take these assets forwards, progressing them to the point at which we could achieve a monetization event and demonstrate value creation. So that's what we've been doing for about the last 5 years. Last year was very important because we hit a very important milestone, which is that we managed to achieve our first significant exit event. And we'd been investing in a company called Kraken Energy, and with our funding, they built up a portfolio of North Sea projects. And one of those projects was of particular interest to Shell. And so we managed to sell the company with just that one asset in it to Shell for a significant uplift on the amount of money that we had put in. And this was extremely important to us for a couple of reasons. Firstly, just it's what the business model is supposed to do. We recycle we sell an asset that we can then recycle that cash into the rest of the portfolio. But more importantly, it was a sort of vindication of the strategy itself, right? So we'd been out saying we can identify assets that the rest of the industry has missed. That was sometimes met with skepticism. But clearly in this case, we've managed to find an asset that no other than Shell was willing to buy and is going to take forward. And I don't think many other junior companies have managed to sell assets to oil majors in the North Sea for a very long time. It's worth noting we at the same time extracted the rest of the portfolio out of Kraken and brought that back into Reabold for just £250,000. So we believe we have another set of assets that we've acquired for a very, very low price with which we can replicate the strategy. And we also have a portfolio of other things which we'll go through in a minute, which we also believe we can use to replicate this strategy over again. One of the things to note is that part of the model is that when we get to a monetization event, some of the cash is reinvested back into other projects to take the rest of the portfolio forward, and some of it is to be distributed to shareholders when appropriate. So we've stated intention to return £4 million of the proceeds from this first disposal to our investors. Okay, so what's going to happen next now that one's gone? Well, we have, as I say, a portfolio of other projects which we believe are extremely attractive, where we think we can replicate something similar to this strategy, but actually maybe on a much larger scale. The most important asset that we've got is this one here. So this is an onshore license called Pedal 183, and that includes a natural gas discovery called West Newton. And we've drilled 3 discovery wells on West Newton to date. Oh, by the way, we own a 56% interest in this project. And those 3 discovery wells have taught us an awful lot about the asset. And they've allowed us to get one of these competent persons reports done. And you'll see that we've got 200 BCF of resource with an 86% chance of success and $400 million of value within this project. And would also state at this point, that's just for the West Newton field. The Pedal 183 license area contains lots of running room beyond that. So this is something that really does have some materiality to us. The key catalyst that's coming up is the drilling of the 4th well on this field. So as I said, there are 3 discovery wells already there. They were all vertical wells. They've taught us a lot about the geology of the field. They've taught us a lot about the resource size. But vertical wells are not appropriate for production in this kind of geology. We need to drill horizontal wells. And the key event for Reabold coming up later this year is the drilling of the first horizontal well on Pedal 183. And the intention there is to prove the flow rate potential of these fields through horizontal wells, and we think that is the key unlocking event for this license area. Now, West Newton and Pedal 183 are part of an emerging geological trend play type in the UK called the Zechstein Carbonate play. And interestingly, this is an emerging play in the UK. It's actually very well exploited in other countries in continental Europe, but it's a pretty new thing in the UK. It predominantly exists in the offshore, but it does extend into the onshore where we are here in Pedal 183. Now, this play type is getting a lot of excitement in the industry at the moment because, back to our friend Shell again, Shell drilled very recently a discovery well called Pensacola, which is right here. And they've discovered a field that at first look looks something not too dissimilar from West Newton in terms of scale, etc. But it's in the offshore. And that's attracting a lot of interest amongst the industry because it's kind of Shell leading the charge in this play. Now, before Shell drilled that well, we acquired these licenses in a very low-cost acquisition of a company called Simwell Resources. We paid £1 million for those. Now, that has not only given us a substantial footprint in the offshore part of this play, but it's also allowed us to start taking advantage of the data and understanding that was available in this offshore area and applying that to what we've got in Pedal 183 and the onshore, and vice versa. And in fact, one of the things that this acquisition has done is dramatically increased our excitement here. So we think that the onshore part of this play is the best part of this play. We think it's geologically extremely sound. We think that the operating cost environment is going to be substantially lower in the onshore. And don't forget that we are far more progressed than any of the offshore opportunities in this play. We've got 3 wells drilled. We've had a lot of data analysis done over this over the last couple of years. And we are the most advanced project in the play. But that's not to say that there's not prospectivity in the offshore. We remain excited about that area of the portfolio too. I think we're about halfway through, Sachin, so you maybe want to take over from here.
Thanks very much, Steve. All right, so Steve talked you through some of the portfolio, and I'll just carry on talking through a few of the other assets that we have. So if we first focus on our North Sea portfolio, so Steve had described a situation where we had acquired for £250,000 a group of licenses from Corallian prior to their sale to Shell. And this has turned out to be a very exciting group of licenses as we've done further work on it. And we talk about it, although there are 6 licenses, we really break it down into 3 core areas. The first is P2478. This is the Inner Moray Firth. And there we have the Dunrobin prospect. And that's quite interesting and exciting because for a low-cost drilling, you can access potentially significant scale resource. And that is, this area here is an exploration type target. We then have the East Shetland Basin, which is these group of licenses over here. And they are a combination of 2 things. We have contingent resources. So to go back to this term, competent persons report, these are discovered resources that already exist on those licenses. And then finally, we have the northwest of Shetland, P2605, which has prospects adjacent to the Victory field, which was this project that we ended up selling to Shell. So those sort of areas really are the new assets that we acquired. We acquired them very, very cheaply. We've been doing work on them now. We've been progressing them through a process, and they are currently underway through an active farm-out process that we've undertaken upon acquiring these licenses and working the data up. Okay, so there's a little bit more about some of our other project areas that we have. Steve highlighted some of the most important one for us near term, which is the Zechstein play in Pedal 183 in particular, the central Reabold North Sea assets, and the northern Reabold North Sea assets. But we also have assets in Romania and the US. And here we're really highlighting, I guess, the importance of capital discipline to us. And if I start with our California business, I think when we were here last time presenting, we were talking about the fact that basically from scratch, with no production at all, we took a group of leases in the US and converted them into production. But as the rest of the portfolio developed, it became very evident to us that the US was never going to compete with capital against other parts of the portfolio, particularly what was going on with Pedal 183. So commercially, we decided to take a decision that we would merge our operations over there with the US player called Daybreak Oil and Gas, and now we own listed paper in a US entity. And I think this just highlights, hopefully, the creativity with which we decide to move things along in our portfolio as results change within the groups of assets that we have. The other asset that we have is in Romania, where a well has been drilled and a discovery made, but the pathway forward isn't entirely clear yet. And while we're allocating our capital resources to other parts of the portfolio, this is on hold for now. Okay. So this is a bit of a timeline, and I've just taken, this timeline's been taken, broadly speaking, going back a year, to show the kinds of activities that go on in Reabold. And what you have across the piece over here, for this 1 year timeline is just running through many of the corporate activity that we described. A lot of the work was corporate, but also some of the more, I guess, desktop work, some of the more operationally driven background and technical work that was going on to progress to the point of being able to really highlight what a good asset Pedal 183 was. If you were to go back before February 2022, you would have seen a timeline that was much more active on the operational side. So we go through these cycles of operational activity and then corporate activity as we move the assets within the portfolio forward. For the remainder of this year, clearly some of the key events and highlights for us will be the drilling of the next well on Pedal 183, proving up the well deliverability from that asset, and then ultimately determining the path forward for it. And you can see that in sort of that future operational activity over here. Now, clearly, with the farm-out process that we've got ongoing, we'll update the market as and when that develops. So in conclusion, I think what we would like to highlight is that we are an oil and gas company that operates a little bit differently. We're not necessarily wedded to any asset or any area specifically, but as we're able to take an asset package or a particular project forward and see that there's a clearer pathway to monetization, our intense focus becomes delivering that value before returning some of the cash to shareholders and then reinvesting in the rest of the portfolio to drive things forward. The sale of the Victory asset, I think, is such a key point and validity to the actual delivery of that strategy that we think we can replicate this many times over within the portfolio package that we have. The Reabold North Sea asset holds a group of those exciting opportunities, and we believe that there are multiple catalysts because of that collection and the work that's been going on in the portfolio for the last several years. So we've validated the technical capability, demonstrated the operating and commercial capability of the company, and we think it's a really, really exciting time and exciting future for us as a company. So I've left plenty of time so that there's plenty of questions that can be asked. Thank you very much.
Thank you. Okay, thank you very much, Sachin and Stephen. This gentleman here, Peter, thank you.
Good evening. Thank you for the presentation. Are there any expiry dates to the licenses that you hold?
Yeah, there are, and there are license expiries that exist for all UK assets. The main ones to focus on are in the North Sea package and North Sea group of assets. Now, we haven't put all of them on there because we're not necessarily sure that we're going to be extending all of the license areas that have expiries. So we have, and they're phased. There's some that are kind of later this year and then into next year. But for our important assets, what I describe as our important assets, there's nothing that's near term in terms of the time frame for license expiries. So in particular, Pedal 183, for instance, if that was a question that you were going to ask about, we've clearly carried out a lot of activity on that license area anyway.
Thank you for that very full answer.
Thank you. While you're there, I'll just ask a quick question before Peter hands the microphone over. What was the key to the sell-off of the Victory asset to Shell? What was the key driver of that?
Why we did it?
Yeah.
Well, okay, so...
Because you've obviously got other...
Yeah. So that was the asset that was the most progressed, right? That had got to the point where it was ready to go into the full development phase. Now, at this point, a junior company has a decision to make. Do you try and take this forward into development yourself, which would have meant us trying to access significant funding, well over £100 million? Is that even possible? Where do we get the operating capability to do something this difficult from? Because we don't have that in-house at the moment. That would have involved staffing all of this up and all the risks associated with that. That was one way we could go. The other way we could go was to dispose of it and then reinvest the proceeds into the other assets in the portfolio and then recreate value that way. And I think it's a pretty clear decision of which way we should have gone. And I mean, the pushback you might say be you give up some value when you do that, because you clearly have to give value to the acquirer. But the ability to then redeploy that capital back into the rest of the portfolio, we think multiplies that value creation. So when we look at it across the portfolio, that was clearly, in our view, the clear decision to make. Sachin, anything to add?
Yeah, I think what we would probably add to that just is in terms of on a go-forward basis, we feel quite vindicated by that strategy, because when we took on Pedal 183 and progressed the West Newton asset, I don't think it was necessarily getting that much attention from the industry. But where we are now, as the other offshore discoveries are being made currently, it is clear that we are ahead of the game in terms of the technical understanding of that project area and the capability in helping unlock that project area. Now, if you compare what is the inherent value in that to building out the operational capability, I think it lends us quite strongly towards the fact that our strength is really on moving on that former case, not on the latter case.
Thank you. The lady here.
Same questions I asked previously about. Sorry. Yeah. Hi. Yeah. Same questions I asked previously. Who are you selling your gas and oil to? And I should have really asked the question: how does this relate in terms of the oil prices and the gas prices being set by Russia? But I know that's kind of becoming less of an issue as more and more. So in terms of the impact that has.
Shall I do that? Yeah, so thanks for the question. So we don't produce any gas and oil out of the UK. These are development projects, so they are going to be producers. But if we were to produce, we have a plan in place. It's called the Conceptual Development Plan for West Newton, and that would go into the National Transmission Network. So it basically goes into your homes, but not that we sell directly to them. We sell into the grid. I would, though, just want to add something quite quickly to that. The location of Pedal 183 is in this sort of energy powerhouse that is the Humber region, and it is hungry for domestic supply of gas because there is this issue associated with security of supply that has been neglected for so long. Now, although we haven't said we are directly going to be selling to all of the industries that are so desperately in need of that gas, including the salt end chemical plant, the power stations that you have nearby, the waste to power facilities that you have, all of which could utilize that gas, as well as the longer-term green energy story of hydrogen, which this asset would fit so neatly into. We have simply tried to make a simple case. This is what a development plan looks like if we just sell into the grid. That's it. But there's lots more upside potential and synergistic benefits that we would look to work as this asset progresses over time.
Okay, I've got another question. Someone's got a question for the gentleman at the moment? Okay, I'll ask a question. When you say you obtain the licenses cheaply, what's the method? What's the process? What as part of your
generally, or
yeah, I mean,
generally,
you sort of highlighted how you
smile sweetly.
Yeah, we do. I mean, we're just nice guys, so everyone so part of the genesis of the whole Reabold project 5 years ago, right, as I sort of mentioned at the start, is that we were in a situation where there was not enough capital in the industry generally. Right? So there were people, in our view, with good quality projects that were stuck because they couldn't fund them. And you had people there, and they're usually people from an oil and gas background, oil explorers, these kind of guys, and they are technically very good and not necessarily so savvy in front of market-facing type activities, and not necessarily coming up with the most efficient business plans, right? Because they were coming at it from a kind of oil company mindset, which is usually bottomless pockets. And So what that gave us the ability to do was to work with some of these guys and come up with a better business plan, a better way forward, and we were the people that then secured the funding via the equity market. But because there was nobody else willing to fund them, we were just in a very advantageous position to get in at a very good entry price. I mean, that was a big part of the rationale behind starting this. Now, of course, the problem on the other side is we are now the owners of these assets in an unloved industry, and finding it very hard to achieve appropriate valuation for them. But that is, again, points to why we believe it's appropriate at the right time to monetize them. Because if the equity market isn't going to give us any credit for the valuation of a project like Victory, well, fortunately, Shell did.
Yeah.
So that's how you ultimately close the valuation gap. But the way in is coming from the fact that and it's been the case for years now, there is just a lack of interest in funding these projects.
So moving on from that, in terms of projects you're currently invested in, I mean, you're going to need to hold on to them until things change in the marketplace.
Well, again, that's what the sale to Shell has demonstrated.
Exactly.
There are for the right project in the right place, there is a buyer, but they have to be taken forward. I mean, the interesting thing about the Victory project is that was picked up by Corallian via our funding in a licensing round a few years ago. Well, Shell could have got it then, but they didn't. It was just missed. These things are under the radar, and you need to do a bit of work on them, take them forward a little bit further, maybe promote them more appropriately around the industry, and that's how you attract the buyer at the right time.
And I mean, just to reiterate the point, it relates a little bit to the question again, is that some of the assets and where they're located sort of suit themselves to a targeted buyer or group or funders and groups. So the onshore asset, Pedal 183, will have a different profile of investor, particularly the ones seeking security of supply in that energy-hungry region. But it would be different for the East Shetland Basin, it would be different for the Inner Moray Firth, and it would be different for the offshore Zechstein Trend. They all have slightly different kind of target groups that we go for, and I guess part of the skill set here is being able to present the exit plan in the most attractive way to that ultimate buyer. And I do think that is important.
Absolutely, yeah. I think it reflects also what Mitch said about having a good tech team on board in terms of doing the groundwork and doing the research and everything else. So, is there any other questions coming from the audience this evening? This gentleman over here, please, Peter.
It appears that Pedal 183 is an onshore concession. Can you tell us if you have planning permission to drill?
Yeah, we currently have planning permission for five
wells.
further wells.
Is that question answered? Excellent.
Yeah.
Just on that Pedal 183, who owns the remaining 44%?
So the ownership structure is slightly complicated. So the operator who owns 2/3 of the project is a company called Rathlin Energy. But we are a 59% shareholder in Rathlin Energy.
Right.
We also have a 17% direct ownership of the license area. When you combine those, that gets the 56% that we talk about from an economic perspective.
Right.
And then there's Union Jack, which has the other 17% of the license.
Right.
So a little bit complicated. There's 3 license holders. The majority owner is Rathlin, but we are the majority owner of Rathlin.
Okay. And you said in your slide there that you return some money to shareholders. That's through dividend.
That is to be determined. It's, given the comments we've made about the frustrations with valuation, we do make the observation that we believe that today the absolute cheapest way we can add resource into the business is via buying our own shares.
Right.
So, I mean, I think we would probably be at closing market price, £18.5 million worth of market cap. So the incremental spend of the 4 million, which would account for more than 20% of the shares outstanding, would increase our exposure to our own projects the cheapest possible way that we could ever access resources, in our view, right? I should say in our view. And therefore, if conditions are the way they are now, if they are, then that would be a very significant factor in determining the mechanism for how that distribution is made.
Yeah. Thank you. Gentleman here, please.
Just a very basic question. Where are you listed, and how is your share price performing? I mean, do you find that it's being basketed pretty much with other oil and gas companies, or has it behaved differently?
Yeah, so it's behaved a little bit differently, i.e. it's been even worse than the general basket. There's a little bit of background to that. We actually underwent a requisition where a group of shareholders attempted to remove the entire board. Was that October last year? That took place in October of last year. That failed significantly. There was a lot of support for the existing board and management. I think 75% of shareholders voted in favor. So it may be that there's a bit of an overhang in the requisition as they did fail in achieving that goal that may have caused that pressure. Now, again, to just go back to the point that you made, we look at accessing reserves in every way we can. That includes accessing it through buying other public companies, accessing it through buying the actual assets themselves, and we also look at our own company through that same lens. And therefore, I suppose the nature of how we have performed share price-wise has led us to this conclusion that I described earlier, that one of the cheapest ways to increase resources is to buy our own shares. And sorry, I don't know if I said, but we're listed on AIM, or maybe you said that. Yeah, sorry.
Listed?
Yes.
Yeah.
So RBD is the ticker.